Hello folks, welcome to another Bitcoin market analysis by Inspocrypto. Today, as announced, we will talk about the second part of my series about coming decisions related to the monetary policy, not only in the US but globally, and its impact, also its impact to the banking sector in Europe and in particular in the US, but also with a global character. We are talking about that, and first of all, I just want to say something, because last time I said something that was completely wrong. Because I had in mind, it was a discussion in Germany when it came to the topic of the consolidation of the banking sector. It was actually talked in a very serious way, but it seems they didn't realize that the Deutsche Bank didn't acquire the Commerzbank. It was at least as I know from German politicians, it was in mind, it was a plan, but they didn't realize it. So we are talking about two different banks. However, the Deutsche Bank had to acquire the Postbank. At that time, the Postbank was also one of the biggest private banks in Germany. And because of the pressure coming from the government, they acquire it. But they didn't with the Commerzbank. Just to make it clear, it was absolutely wrong. Everything else, in my opinion, is still valid. I just had to check the name of my follower Mirko, who just sent me the DM explaining that the Deutsche Bank didn't acquire the Commerzbank, so thank you very much for it. But he also said that the impact of rising the actually the minimum reserves of German or European banks, because we are talking about a European decision of the ECB, the European Central Bank, would not be big. And in my opinion, that's not right. That's not right, and I will explain why it's, in my opinion, not right. As a consultant of the banking sector, you sometimes have a bigger view to the conditions of this landscape. Due to the fact that we had extremely low interest rates, obviously it was very hard for the banks to make any money. Making any landings, so it wasn't really in their focus or scope. So instead they used to look for alternative ways, at least just to maintain its liquidity there and to make some to make some yield. A constant one, and on the other part, many of them just really locked their liquidity in assets that was constantly bringing or generating a yield, taking into account today's environment that changed a lot in the last few years. Obviously, relatively low to today's possibilities, but they have contracts, and I know at least two banks in Germany that have these problems, that they have limited liquidity because of that reason, and they don't have the availability of this liquidity at any time. So that's why I said, and I'm saying several times, that for a bank it's not just easy to adapt to the market conditions like many would expect, because it's a big process. You are going to trigger a process that's not just to say, hey, Today we are just going to make completely a different thing, because it's not just the processes in an organization that's big, like for example for the Deutsche Bank. It's the systems you have. I mean, if you're starting to focus more on trading, usually you will adapt your systems that you have. Of course, at the same time, take into account the rules that you have to follow, so the regulation, and you have to adapt all these systems you have to the new trend, to the new scope you have when it comes to generate new earnings. And also here I know at least one bank. I'm not going to say any names, obviously, because it's I'm talking now as Inspocrypto, not as the person who is behind of Inspocrypto. But the thing is, they had just to react to the market conditions, and they are adapting their systems, but it's going to take years. So it's and we are not talking about a bank that has 50,000 employees, okay? But that's the thing, and that's the big thing that many are ignoring, or sometimes they just don't know. So we have different factors, and every single time, and that happened to US banks as well, every single time when monetary policy is changing their policy, when central bank starts to completely change the direction of the wind, how to get the liquidity and at what conditions, it have always big impact to the banks. Obviously, in the past and the last decades, it was in favor of the banks. It depends what kind of a bank. If it was a bank that was its main business was the lending business, so to give credits and loans to its customers, it was a big pain in the ass. And as mentioned, I know here several cases where it was the case, and they just had to rethink its strategy that today was taking into account the current monetary policy. Obviously the wrong decision, but at that time it was the right one. And on the other side, those who had big departments of trading, those who had enough volume to make big business on the financial markets, even just driving those markets. I mean, to manipulate an asset like gold means someone was the main driver, like it happened with JP Morgan in the past, like it happened with Goldman Sachs as well. So the same is happening here. You have main drivers. They are even slowly or slower if they have to adapt to the market conditions, but they are extremely creative. And obviously they have not only, I would say a power to bring decisions related to politicians on their side, and at the same time, obviously, they have the money just to reduce the impact to its organizations. So we can't say the banks are the banks. We have here obviously different entities who are playing a role, and every single one has its own character. That's also something we need to have in mind. But, just to come back to what I have talked about just 2 days ago, when the central bankers, in this case the ECB, the Council of the ECB, is talking about to rise the minimum reserve from 1% to 10%, that's a huge thing. You remember a few months ago when the Fed was very aggressive, saying they are going to hike and rise more the interest rates. All these banks just yelling for more liquidity. And the Fed finally reacted because they were noticing potentially risk of a collapse of the banking sector. Well, what the ECB is doing, and if the ECB is going to do exactly the same, it will have a similar impact. Because at the moment, no big banks in Europe is yelling for liquidity, but I know that the liquidity is not just there. So they can manage it. Yeah, they can manage it. But if they start to create artificially just a bottleneck, it's going to create a very dangerous and risky scenario for many banks in Europe. And that's going to be a chain reaction because one bank depends on the other bank. It is, you can have 10 different relatively small banks, but all of them are well connected, and usually they have any kind of agreements with big banks. So if those collapse, the big bank has to acquire them at the conditions that usually they will yell for support, government support, and they will receive billions and billions and billions of whatever credits or whatever they will receive, or support or whatever, just to do it. Because obviously the worst case scenario would be a worst case scenario for the whole national economy at the same time. So just to make it clear. Now let us go forward and let us talk about what happened last week. I think it was last week where we had something like a marathon, or about different central bankers that just in 36 hours, within 36 hours, 11 central bankers did in a statement talking about their money or monetary policy measures. We had just to call or to name two of them because, in my opinion, at the current time, those two are playing the bigger role on global level is the US Fed and the BOJ, so the Bank of Japan. And the Fed has started to change a little bit their rhetoric. They are just, some members of the FOMC are saying that in 2024 and 2025, they are still expecting to decline the interest rates, but less than expected just before. And I think that's a big problem, because at the same time they are mainly also just telling us they will maintain the current interest rate level, and that's absolutely fine, because when you know a little bit how banks work, how much time they need to react, it's absolutely fine to give them the opportunity to adapt to the current situation. Obviously, some would say, but if we decline, we are supporting them at the same time, because they don't need to because every single change means spendings. It means spendings. It means not only spendings, it means also that you have to decline your current operations, because you don't have unlimited resources, also not human resources. So obviously, if you want to spend in a new strategy, you need to take out some resources from maybe a currently still valid, good working business. And that's usually what happens. It's a balance. So when one thing is unbalanced, you need to take from the other part just to bring it a little bit more up, to have this balance once again. And usually that will have an impact and a reflection at the end of the year to your earnings. That's usually what every single time happened to every single financial crisis we had in the past. And even when we were talking about digitalization, for example, when banks started to transform their organizations. So members of the Federal Open Market Committee, that's the FOMC, just started to project fewer rate cuts in 2024, 2025 compared to the last projections. And that's also very well demonstrated by the yield curve. That's still inverted, of course, but also here it's still, and it's slowly indicating that also the market members are reducing their expectations of how the monetary policy will be in 2024 and 2025. At the same time, while the US interest rates were rising in last year and in the recent time, obviously, it also pushed the US dollar. So foreign countries and entities started to buy foreign dollars, and that is also something that could bring the US in a bigger problem. Now you would say, but why? Because, you know, a very hard US dollar should be good for us because we can import things, stuff, for less money. Yeah, you're right. But, I mean, if you want to sell, it's going to bring you in a different situation. And we had the discussion also with Donald Trump, where he started to rethink its financial policy at that time, where he said we had a huge deficit when it comes to the trade balance at the end of the day. And that would just escalate the whole situation as well, indicating that the US had then to import more for less money, but will export less. And that would increase this unbalanced situation in the US. And obviously, it would make some commodities also more expensive. But that's another thing we are going to talk about the whole oil complex, what is happening there, because many people also just, it's part of the whole situation and discussion, is when they are thinking that the inflation is declining, while they still have the goal to bring the inflation to 2%, while they are noticing that the crude oil is hitting $100, and while the OPEC Plus has extended its production cuts, even unexpected, until the end of the year, and where refineries are struggling to produce enough fuel. I mean, that is also giving us a signal that we will see a further rally in oil prices in the coming month. And that's not usually an indication that inflation will drop, like some members of the Federal Open Market Committee right now are expecting. So I still think that those rate cuts in 2024 and 2025, maybe they will make one or two just to give the whole market, to support the market. But in my opinion, that's it. That's it. We are maybe going to talk about a very small pivot situation. But in my opinion, the inflation, and you remember where I said inflation doesn't come and goes. It's not inflation. It's you know, when you have malaria, for example, and you are just taking some, I wouldn't say useless pills, but just pills that slow down your fiber. But that's mainly it. It's not going to help your malaria, and you will get your fiber over and over again. And that's the same with inflation. Inflation is an indicator that something in the whole system is not okay. And as mentioned also in 2021, when everything started, where I said we need to be extremely careful now, because in my opinion central bankers doesn't have the options anymore. On top, and that was just before the Ukraine-Russia crisis and military operation there, where I said, you know, if the whole thing starts with inflation, then we are almost done. We are just almost done. I mean, when that has a historical context, when usually inflation starts to decline, when they start to make this kind of rate cuts, it's usually an indication that they need to support the market, because otherwise it's in a risk to collapse. And usually then it happens. That's the historical context. Of course, we can pray and hope that's not going to happen, but in my opinion, we are in a very sensitive situation, and in my opinion, central bankers know very good that they don't have any other option as to follow what in history happens already. Because, you know, in Germany we say when the child that would be the child has fallen into the well. It's I would say something like the, you know, it's water under the bridge, or the ship has sailed. So it's over. We had the opportunity, we missed it, and it's over. I mean, they created this situation, and in my opinion, we don't have any big options here anymore. So with a strong US dollar, and at the same time with the crude oil that's going to rally, and that's, it seems, how it's looking like, a potentially default related to the US debt ceiling, for example, could be really a serious, extremely serious situation that, and I'm still a very big fan of it, could potentially drive up the gold and silver price. You know that I have said that many times, and people who said, hey, but how can I invest in, well, in gold and silver? I don't know if I would buy gold, to be honest, but I would maintain in my portfolio just a part of gold and silver as a risk management measure, to be honest. Not only because some central banks, like the Deutsche Bundesbank, that's the German central bank, for example, didn't deny the potentially evaluation of the gold reserves, just to neutralize debts. So that also means they could just artificially raise the price of gold, for example. Also something we should have in mind. So while central bankers are expecting that the inflation could decline, could decrease, like it happens now, for example, in August, we were just noticing that the core inflation rate in the US, excluding food and energies, just have fallen below 4%. The first time, I mean, in almost 2 years. In the Eurozone happened something similar. At least it likely slowed to 4.8% in September. And that's a 1-year low. But at the same time, we have new challenges. We have China as a challenge where the economy of China is not looking good. As mentioned, while the US dollar is looking very strong. In Europe, we have completely different challenges that we have, just to fix, because we are talking in particular about big problems that we have, not only on political levels, but on economy ones. And so everything what is happening, every single decision that central bankers will do will have just an impact to the global economy, but for banks, for example, as well. So with the interest rate policies we are talking about, they need to be extremely careful with the situation, because both to still rise interest rates will become more serious for the economy. To decline to make rate cuts could also be a challenge for the banks. It depends in what situation the banks are, if they are adapting to the situation slower or even quicker than others. Because now every single step can have a bigger impact to their business. And so if they are more right now focusing the lending, because obviously a rising interest rate doesn't attract you or me just to buy or to build a house and just to lend money from the bank, because it's obviously going to cost more for us. But if we have to do that, for example, like what in Germany is happening, they are forcing you to modernize, for example, the energy systems of your houses, then you need to make this kind of lands. It's not an option. And that's where the bank can make bigger deals with you. That's obviously just one example. We can have other examples where other companies try to survive, for example, the current situation that's becoming more serious to them and to their business. And, sometimes you are in a situation you can disappear, you can close your business, or just go all in and to invest. And usually in the liquidity ratio that we have at the moment, not only at banks but also in businesses in general, lending is one option. So it's not easy at all. So, for example, just to make another scenario where the monetary policy of the Fed will have a reaction. I mean, if they start to change its monetary policy, it will have, as we have mentioned, just an impact to the dollar as well. But just in case, for example, commodities and investments, where a bank is investing in gold or in oil. Usually both. I mean, in case of gold, we know if the US dollar goes up, the gold price goes down. Same with oil, for example. And that has a direct impact to the balance sheet of the banks. So they need to neutralize this impact. And every single change of the strategy is a change that generates spendings. And that's what I tried also to explain, that the pressure with a very dynamic environment that we are creating, where we are rising the interest rates, where we are talking about cut the rates, because we have different banks. As mentioned, we have different banks with different business models, and some of them, some gamblers, those who are, for example, they just use liquidity, to speculate on SPY, on Bitcoin, whatever, maybe it would be more in their favor if the Fed starts, for example, to cut the rates. But for others, it's not going to be in favor, and those will be in risk, while at the same time the liquidity, just not only because of the rise of interest rates, but also because of the Fed balance sheet reduction of the last month, I would say, even it wasn't, well, it was big. It wasn't huge, but it was big because we had at the same time they open other channels, but that also means liquidity is limited. And it's always a big pain in the ass for the banks. That also indicates, and in the US is happening, we will talk about next Monday, but in the US is happening where big banks are just acquiring smaller banks. And that's, in my opinion, not only not fair, I think that's rising the risk, because if those, let us say the big four, if one of them collapses, it's not going to be that easy just to support this one, because if one collapses, that's a big problem. If two collapse, it's a game over. It is what it is. But that's the trend, unfortunately. And obviously, we can talk about, as we have mentioned just before, the credit risk. The credit risk depends on different things. I mean, as soon as you have a demand for credits and lending, it doesn't matter if it matters. It would be more in favor if the interest rates goes up, and it's not that low. But when you still have demand, it's absolutely fine. A problem starts when the demand starts to decline, because, for example, with inflation, companies had lower revenues, lower customer spendings, then a potentially downturn of the global economy, like we have seen right now with China. And we know that many companies are globally connected. So if China has a problem, usually many other countries and continents will have the same problem, or at least also a problem. And that could trigger a credit risk also for the banking sector, that many of them is adapting to the market and focusing more and more to the lending business. So also here we can see directly that the decisions what central bankers are doing right now, and even since a while, it's not new. It's not going to support the banking sector, and it's just generating more challenges, in my opinion. And obviously, I mean, back to inflation, the changes of commodity prices, in particular, for example, oil, at the same time a stronger dollar, will just push the inflation level across countries. It's a fact, and that happened in the past and will happen then again. And that will trigger once again the situation that will bring the global economy stability in a risk situation. And in my opinion, that's going to happen again. That's why I'm absolutely convinced that inflation will come back. But this time it's going to be even different, and in my opinion, even stronger. Because, the Ukraine-Russia war is now running since a while. The situation didn't calm down like many were expected, that it was just a period of time and everything will stop and we will come back to the old situation. I mean, no, not many at least are talking about COVID. And COVID, at least here in Europe, I'm noticing that, for example, even in at my customer, where employees are now, they are now getting COVID and they can't work. So if COVID is also coming back, you can imagine that this will also have an impact to the economy. While we have at the moment a downturn trend, not only because China. And once again, this situation could give certain assets and maybe even Bitcoin, maybe. I mean, that's something it has to show if it is capable to show that it's a safer haven, if it's a safer asset where, banks could be motivated to invest in just to minimize their risk. Like, for example, in gold, like, for example, in silver and other assets, just to reduce their impact to the balance sheet. And because they know it will have, obviously, a bigger impact to the global economy. So bond markets, for example. So at the end, crypto in general, but let us talk about the main crypto coins here, or tokens, Bitcoin and Ethereum, will have in the future the opportunity to show really if what kind of asset class it is. Because at the end, it will depend on if banks will declare it as a safe and risk, or to at least as an asset class to reduce their risks, or not. If not, in my opinion, then we are done here. Because in the next years, I don't see a recovery like many people are still expecting. I don't see that. We are in a transformation, and those kind of transformations that we have in history over and over again hurts. Like, for example, what I have mentioned so many times about regulation, for example. It's exactly the same. It hurts. It gives you a hope. It's like a little bit like a reset. You make something safer or better, and then it will show you its new phase, its new opportunities. We will see what will happen, but in my opinion, what central bankers are planning at the moment, what mainly, let us talk mainly about, for example, because even China's central bankers didn't reduce, they didn't cut more their rates. So everything is indicating that even the central bankers are recognizing, as usual, late, that their projections were maybe even misleading or absolutely wrong. And once again, the ship has sailed. It's over. I mean, we didn't have any options just before, but now it's really over. So I know it doesn't, today I'm a little bit slow, I guess, because it's late and I had a really, really tough week. But I hope it gives you a better, because that's the main goal of this series, of these 3 different podcasts right now, talking about, monetary policy or the impact to the banking system, because it's crucial. It's absolutely crucial for us. It's crucial for the company you're working for. It's crucial for the economy. It's going to be crucial for your family, and it's going to be crucial for crypto in general. And to track them and to track the developments, it's absolutely important. And that's the only goal. It's just an experiment right now to make this kind of podcast and to give you, I hope, an easier availability to have a better view what's happening behind. And when people are saying, why are you bearish? It's because I see that. I see that because I see that every day. And many others are just ignoring it, it seems. And that's the only thing. to be honest, I have said that so many times. I love crypto. Blockchain is the best, in my opinion, when it comes to financial markets. It's going to revolute the whole market. It's going to be, yeah, the best invention ever, at least for me. But blockchain doesn't mean crypto in general. It doesn't mean you have to invest in a token that doesn't have anything than just bits. It doesn't have nothing. It's believe or believe not in something. You know, those who are saying fiat, it's the same. Yeah, it's centralized, and obviously, I mean, we can say Bitcoin has, you know, a use case, but many other crypto tokens doesn't have them, and they still exist, and they are there, and they push up 200% and dump afterwards 150%. So we need to be absolutely clear in mind where we are going to invest our money, and better we started yesterday than tomorrow. So now after 30 minutes, because today I'm really low, let us go forward and check what the market is going to do. So we are not going to rush now, but I'm just going to increase a little bit the pace. Let us start with the weights ratio 1 day time frame. I'm really sorry, but it was really a tough week, and I'm noticing that my concentration is passing away. I need weekend right now. So if we check that here, we see that the weights ratio is bouncing here right now. We can see also here. So we need to see if those 42% it's over, that's it, or if it really starts to bounce and it goes up, because that would indicate sell pressure will start once again. And everything was once again just to look for liquidity for those who you know, get some FOMO and starts to buy. And as one analyst out there said, hey, it's the first time where I'm noticing they are buying spot. It's more spot driven than futures driven. That's correct. I can verify, I can confirm that. But, and we had that in the past several times, that's not necessarily bullish. Because to buy Bitcoins here could also just afterwards let them dump Bitcoin afterwards. So we need really to be patient and to keep tracking some different flows. So for example, what we see here is that the price went up, and you can see what the weights ratio 1 hour time frame did. It started to decline. So means weights let the price go up. At the same time, they also started in sequences just to distribute. And you can see that the weights ratio 72 hours moving average is bouncing, and it seems it's now hitting upwards, I guess hitting 90% once again, while the liquidity on centralized exchanges, that's the stablecoin reserves, is now declining. And that's indicating they use that once again. I mean, just to buy doesn't automatically mean that's extremely bullish. As you remember in March 2022, where many were expecting it was bullish, because if the CBD was extremely looking very bullish, and at the end it was a trap, and afterwards they dump with that. In my opinion, it was a bigger entity behind FTX that was using FTX, and some of you know that in February, Sam was meeting one CEO of one of the biggest banks in the US, offering any kind of cooperation or whatever. So anyway, So what I see here doesn't look healthy. It doesn't, for me, it once again, it doesn't look, I mean, I was expecting a little bit we will go up. We missed, by the way, I think we missed the max pain of 26.5 this morning, because we went just before to 27k. I think we did. And now we are on the max pain levels for this month. So yeah, it's really interesting what will happen next. I was expecting to push up to 27k, but I'm also expecting to go down from here. Maybe I'm wrong. We will see. So let us go forward. Okay, I recorded almost 7 minutes and forgot to press the button of record. That's nice. Okay, now I need to rush. If we check this here, you remember we had minus 5,000. Now we plus 5,000. Now we have minus 5,000, indicating we have now almost a delta of 10,000 in favor of outflows. Usually you would say that's bullish. In my opinion, bullish in short term. And we can see here, for example, what happened. Now some bitcoins are coming back to centralized exchanges. Also here we can see, in my opinion, they accumulated well. They are just looking for an upper price to sell. 26.5 was my expected price for this morning. I missed that. It was 27, so I said we will see 26.5 and then 27. Usually we had for October 28th 26.5 max pain, and for today, and as I know, it was the quarterly expiry today, not yesterday. So I was a little bit wondering why they were front running it, why they are pushing right now. Some are saying it's because of the announcement that Coinbase got approved their future market license. Well, I mean, yes, obviously we know that the market doesn't matter. I mean, bad news are good news are good news, and no news are no volatility news. That's everything. So yeah, but at the end of the day, to make such a push and to maintain, if you don't trigger enough constant FOMO, it will end to go down once again. And we will see later on where this liquidity came from, and that matches very well also to the unusual whales chart. For example, if you check the market cap of Tether of the last 7 days and their peg, it was required, it seems, for Tether to react and to just create more fake US dollars generated by thin air. And obviously when they do it, they use them. So if we check here, for example, the 24 hours inflows, outflows on exchanges, we see it's once again even more bearish than expected, because it's indicating they sent 380 millions in crypto to the centralized exchanges and 116 millions only in fiat. Now we need to be careful here, because we have here USDT. So if they send USDT here, and that's my expectation, to be honest, we would see later on why. Then yesterday's move was mainly driven with Tether. So also here we can see USD 460 millions in, 624 millions out. That's bearish, because it's a bearish balance, indicating they sold more crypto and withdraw more US dollars than they sent to. BTC 430 millions into exchanges and 180 millions out from exchanges, usually also a bearish one of the last 12 hours, but fear and greed at 48. In my opinion, it's a very short-term operation that started yesterday. Also here, for example, we had 50 millions green today. Now it's minus 90 millions on Binance, indicating they are cashing out and taking out money from here. Also spot volume, it lifted up by 1 billion since yesterday, but it's still compared to the 24 hours open interest, still a half of it. So yeah. But at least we can also see here we had yesterday almost or 2 days ago a sales of 60% by whales. Now it's 50-50, and you remember where I said, holy shit, BTC USD 40%, now it's 21%, but look what BTC USDT. So someone started to use USDT to buy Bitcoins. And if you check this here, that's, I mean, and now market cap, what should I say? It's just, you know, I mean, I know many of you wouldn't agree with that, but I'm absolutely okay that the ECC is not going to approve any spot ETF, BTC spot ETF, while Tether still exists, to be honest, because nothing has changed. They are still doing exactly the same. First, they said they are going to stop with the USDT lending. Now, since this year, they started once again to use USDT lending. We have seen what happens when they stop its lending operations. The Bitcoin price just, well, dumped in 2021 at the end of the year, and even 2022. And this year they start once again with the lending, and everything looks much better. Well, much better, but better. In 2024, they said they are going to stop again with their lending operations. So to generate fake US dollars from thin air, that's what it means, USDT lendings. Anyway, I'm not going to start with that again, but because you know what I'm thinking about Tether, and that was one of the main arguments of the ECC why they didn't approve any Bitcoin spot ETF yet. And their main rejection, they said it's because of market manipulation by Tether. Nothing have changed in my opinion, unfortunately. And yesterday was one of those perfect examples. Yeah, so BTC USD declined almost 50%. BTC TUSD lifted up almost by 6%. BTC USDT is the main king right now. It's what weights are using. Bitfinex breakdown, exchange breakdown declined also by 50%. It's now at 20%, and Binance started to lift up, also here indicating that the main purchase power is coming from Binance. Yeah, so that's almost it. Let us go forward. Okay, I really need a break here. Okay, then next, futures. You can see open interest went up like a rocket, leverage ratio a little bit following, but the open interest mainly why the funding rate was declining and the price pushed up. So usually what happens mainly that the market is doing the opposite. It wasn't a big liquidation operation, by the way. They liquidated almost 620 bitcoins in shorts and 150 in longs. So that's mainly it. If we now check, for example, what is happening here, now the long short ratio, it's indicating 55 to 45. So we received almost 200 millions in shorts. They closed almost 200 millions in longs. Now longs are coming back, shorts are declining. Also here on Bitfinex, shorts are coming back and longs are maintaining, and that's almost it in my opinion. Still not looking great. It's, yeah. So if we now check, maybe go away here. Yeah. No. Okay, so what we are noticing here is that they started once again just to bring high leverage longs in position, so if they want to liquidate them, we can see that we should go down to 26,250. I guess something like 26,500. That's something I would expect next, to go more down to 26,500, for example. And the whole thing yesterday was for nothing, or at least we will go, in my opinion, we will go a little bit more down. Anyway, I think that until end of the year we will go hitting 27k again. We will see. We will see. So that's it. Let us go forward. So if we check here, we see that the gamma exposure all expirations are at 27k. You remember where I said that's the level where bulls and bears will fight. So, but that's at the same time what bulls were looking for, 27k. At the same time, the GAX is now at 176,000. So also indicating it gives us a lot more space to the downside and to go even back to 26. So we need to see. Now what we should track is the last expiry for this year. That's December 29th, because it's one of the biggest. And we still have here, for example, a max pain of 27k. So until then it can change a little bit. That's why we are going to track that. But it should be one of, it's not required, it depends a lot of the conditions of the market, but it should be one of a very solid way to indicate what levels we will see until end of the year. So if we go forward, custom strategies, bull call spread, bear diagonal, short ratio call spread. I see here custom strategies, nobody knows what's behind. We see bull call spread, it's bullish, bear diagonal spread, it's usually bearish, and short ratio call spread, it's bearish, because it's mainly nothing else than a short based on options. So if we now go here and check custom strategies, let me see custom strategies here. Anything big, premium, wow, 4 pages, that's a lot. Premium USD, nothing. Oh, here, okay. And that's, oh, that's a multi-leg. It looks bullish to me. It looks like someone is making a bet until end of the year to see a price something like between 34 and 35, indicating 35 could be it. Yeah, big money is related here. If we see, they sold both calls, they both won. So they sold for 800k and they bought for 270. I guess that's more, yeah, someone just is trying to make here a big deal, but we don't know what's behind, unfortunately. We have here another one where they are expecting for next year in September to see a price between 35 and 50k, but that's for next year. So bull call spread, that's the next what we are going to check. Bull call. The bull call spread, it's 2 pages as I can see, and we have here, for example, one where they are expecting to see, for example, well, sorry. What is that now? Bull call. Okay. Yeah, where they are expecting to see a price above of 28k until end of November, so until this year, and hitting more 34k, for example. If we check now the second side, we just have one, it's a retailer trade it seems, so we just have one big one here, but it's, yeah, we have another one here expecting to see until mid of October a price above of 29.5, so hitting 30k. If we now go forward, the bear diagonal spread with puts, where we have here big money involved, 3 pages. Oh yeah, we have here some where they are expecting, for example, here it's one, yeah, it's one where they're expecting until end of November to see a price below 25k, below 25, below 25. It's almost the same. So it looks like it's one trader, one entity trading the same. It's always the same. Then it's big. 25, 26, 25, 26 until end of November, checking and indicating, yeah, he's that's a separate one, it seems, but everything else is 25, 26, indicating they are expecting to see a price below of 25k until end of November. And then last but not least, it's the short risk reversal, where, well, it's not big at all, really not. So they okay, that's crazy. Liquidation level until end of March next year is 65k, but they are expecting to see a price of 15k or lower. That's the bet. But I mean, yeah, it's not huge in volume, so that's fine, but crazy. Okay, that's it. So if we now check further, I'm missing my epic pen here. Where's my epic pen? Why did you disappear? Where are you? Oh, okay. So if we check here, we see that you know, BTC USDT pushed up. It's declining right now. Also here BUSD, but look, that's not volume at all. USD, for example, is pushing up, and here, for example, BTC collateral futures and stablecoin futures are following a little bit. So if we check this, that looks like a little bit they triggered FOMO, and mainly USD pairs are pushing up at the moment, indicating they are purchasing more than selling. If we now go forward, we can see that's what the aggregated CBD is doing. That's what BTC TUSD is indicating, where they are declining, so selling more. And that's BUSD on Binance, but who cares? We can see what Bitfinex is doing. It doesn't look like they were in mood to follow the whole thing. I think everything came mainly from Coinbase after after this huge event that Coinbase finally can make some money liquidating its customers, like every single other exchange is doing. So we can see here, for example, that Bybit BTC USDT is also pushing up, but just front running. It's nothing new. So if we go forward, now we can see Coinbase, as mentioned, it's the main driver when it comes to BTC USD. You can see it's pushing up now, distributing at the moment. We can see, wow, BTC USD Bitstamp, Jesus, wow. Wow, it's mid Coinbase. I don't know what happened on Bitstamp, but someone on Bitstamp was very bullish. Look, it was the main driver of the aggregated curve, it seems. Well, Kraken also following. As you can see here, it was front running and still pushing up. And Gemini, well, but Gemini doesn't have any volume. And we can see what happened here, that the next we almost bounced here 26.6, where we have related to volume profile the next POC, and if we break this one, we should go down to 26.100, but at the moment doesn't look like. So at the moment everything looks they are maintaining. Yeah, so from miners, really quiet in the last few days, to be honest. We can see, for example, here that funds started to lift up a little bit, so they purchased a little bit, but just few hundred. We can see that the ratio, the volume ratio, spot versus derivative is more in favor of spot. Not huge, but something to see, and that's mainly it. So if we check here, we can see that on Coinbase, they are waiting here with almost, I would say, 220 Bitcoins at 27,500. At the same time, they are still protecting 25K. So we can go up like we did here, you know, just to distribute there, because it looks really relatively similar. Pattern analysis, let us check this here. Then we have 1, 2, last time 1, 2, 3, 4, 5, and then finally go down. So, and we can go then down once again, hitting 26 and even lower, and then once again maintain here, go a little bit lower, hitting 25, and then push up once again. And we are going to play this game as long as they can distribute. Bitstamp, BTC USD, that was crazy. That was the main, it seems. No, it wasn't. But they purchased a lot. Oh yeah, if you check the delta, volume delta, 250 Bitcoins here. Wow. Wow. Okay. Mainly purchases. Someone was big buying here on, but also here they are protecting 26, for example. Binance BTC USDT, if we check here, yeah, they are also waiting at 27,500, for example, but also protecting 26. BTC TUSD, well, they are protecting 28.5. Well, I'm saying protecting, but it's not right. They are not protecting anything. They are just they have their orders there. Well, on Bitfinex, it's just a piece of shit. It's only algo shit. Also here on Orc Export, Kraken, BTC USD, they are here waiting at 26 to buy 120 Bitcoins. Otherwise, at the moment, 27.5. Qcoin, they removed the wall here, 24.5 it seems. Bitmax, nothing. Bitget derivatives, nothing. Bitget derivatives, no, with Tether, nothing. No derivatives, BTC USDT, even here it doesn't look big, to be honest. Still waiting here with 1,200 Bitcoins at 25K, and at the moment some liquidity waiting to go short until 28. Well, BTC BUSD, we don't care anymore. Bitfinex, they triggered the short order here at 27. Yeah, it's algo. Kraken is also waiting here, 26.1 to go long. OKEX futures, they triggered also here 27.5, a short order it seems, with yeah, but nothing big, $27,000. Qcoin futures, nothing. And finally Deribit, they removed here. Well, it's really unclear to me at the moment. I would expect to go a little bit more down, hitting 26,500 for example. Just go to 26,500, maintain, and go back to the POC, because they are you know, they are really just failing and maintaining a price above of 27K at the moment. 27,150 were they could maintain like they did last time, but it looks really similar what they are doing, and everything for me looks like algo trading what they are doing, and that's why it's repeating just the same just the same pattern. So I would chill. I would really just chill. I would avoid just to trade this year, to be honest. Until end of the year, I would have my personal trend to say we will maintain between 26.5, 27.5 or something because of the last year expiry, but everything else at the moment, to be honest, I can imagine they will distribute. If they see a cut of demand, the price will decline, like it happened today, for example, here. And yeah, if you want to know what the market is going to do, check just Tether's market cap and peg, and then you know. Big love. Have a nice weekend. We see us next week. Your Inspo. Bye bye.